everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of May the 8th, 2017. Now, we're going to have a busy week again this week. We're coming off some of the U.S. data, so let's first talk about that. When we look at our U6 number, a very important number here, just so everybody can see this, you can see we're looking at the unemployment rate using the U6 number, to see what the labor report really states. Now, when we look at this since Trump has come in, basically at 9.4, we've come all the way down to 8.6 on the U6 number. So this is a very, very good labor report here, guys. A little bit mixed on the U3, but the U3 really is just a household survey number, guys. The U6 looks at the broader unemployment. So we've come from 9.4 million all the way down to, again, 8.6. This is a fantastic number. And actually, since Trump has gotten in, love him or hate him, the market is moving in the right direction. The economy appears to be moving in the right direction. So at least for now, he gets a pass for that, if nothing else. So once again, a lot of people coming back into the, when we look at the broader unemployment situation in the U.S., we can see that it is absolutely moving in the right direction. To find a number basically as good as the 8.6 number that I've posted here, we would actually have to go all the way back to, so if we look at this 8.6 number, I'm going to be going all the way back basically towards November, December of 2007, which was, of course, the latter part of or during the Bush years, actually. So it certainly appears that things are going in the right direction. Now, the dollar did sell off a little bit on that initially, but in most cases, what I discuss with my own direct clients is that whatever the market does on the Friday of the non-farm payroll, it usually does the exact opposite on the Monday and the Tuesday. So this week is different. We've got the French election. It's there's probably going to be a very sharp gap in the market here. It looks like the centrist candidate is going to win. I don't know if that's good or bad for France. That's very difficult to say at this particular stage, but it could have a big impact on what's going to happen with the euro and the equity market. So right now, it looks like the equities are going to do okay. The euro is going to do okay, but I still would anticipate the dollar to recover once the news of the election wears off by Tuesday, Wednesday. We should see the dollar regain some strength, at least some strength. Now, again, it's going to be a very choppy open, so be cautious. Now, when we look at the euro, we can see that the euro, while the candidate that the markets were looking for is likely going to get in, at least at the time of this video being done at 3 p.m. on Sunday afternoon, it looks like he's going to get in. This should push the euro higher. My concern is this could be a buy the rumor, sell the fact. When we look at the VantagePoint indicators, we are overbought. There is absolutely no question about it, but there's still room for a further spike on the gap and probably into Monday and Tuesday trade. But then we have to be a little more cautious here and start to look and see if this thing's going to turn around. And all of this has been already priced into the market, and then the euro sells off. Well, if the U.S. labor report has anything to do with it, the euro very well could sell off by Tuesday or Wednesday of this coming week. Looking at these VantagePoint indicators warning us that we're heavily overbought. Now, when we look at the U.S. Swiss franc, which mirrors the Euro US, we can see the indicators from VantagePoint are heavily oversold. So one goes up, one goes down. So longs next week, I think, are likely going to be a very good trade here, potentially on U.S. Swiss franc. The 98.50 level, we want to watch this closely. Our VantagePoint indicators are starting to roll over to the long side. We'll keep a close eye on this. But right now, that critical VantagePoint 18-day predicted moving average, that's coming in at 99.53. If we get a sustained break of this level, guys, we want to start getting the longs in there right away, because that means the pressure will officially be off the downside on this particular pair. Now, when we look at Great Britain US coming into next week's trade, what I talked about in the last couple of weeks videos here, I've talked about this large spike on this one particular bar right here, and that created basically a very broad range, and the pound dollar has been struggling with it ever since. So this 129 area area is a big level. Our indicators from VantagePoint are still very mixed and grossly overbought. Now, just because something is overbought doesn't mean it can't move higher, but at this particular time, our key VantagePoint moving average, predicted moving average, 127.97, we're closing 129.79. So the further we move away from this particular number, the more likely it is we're going to retrace to it. Once again, this does not have anything to do with Elliott wave or Fibonacci. We want to try and keep this as rational as possible. Based on the correlation to 30 other markets, that's what's going to tell the tale, will be the tail of the tape here. So we'll keep an eye on this for now, but what I would like to see, if this truly is a much bigger bullish move on the British pound, I want it holding above 129 going into next week's trade. Very, very important, that current level at this time. Now, as we come into the dollar yen, I had talked about this in last week's Forex Weekly Outlook and suggested that we're probably getting ready to move higher. Now, what I will point out with that very, very strong labor report under the new administration, the last 4 or 5 months have been fantastic, actually. If that continues, basically right now that labor report is telling me that there's a better than 60 to 70% chance the Fed is going to hike in June. So if the Fed hikes, right now we had to break through this trend line. Our VantagePoint triple EMA cross gave us a very clear warning that that was going to happen right here, and we've broken through this trend line. So now we're pushing higher. 115 is absolutely within our target sights, providing this French election goes okay. Let me be very clear about that. So trading this week, we want to hold back until probably 9:30, 10 a.m. Monday morning. Stay away from any pre-market trading prior to the UK Open, prior to the London Open. Be very cautious. But the key VantagePoint level, 111.27, that's our support area for the week, followed by 111.91 and 112.49. 112.49 will likely be a reasonable entry point to start the week. Between that and the 112 area, as basically as long as the French election goes as planned. Now, what we also want to look at here is one thing that does concern me with this particular pair is we are moving towards overbought, but dollar yen notoriously ignores overbought and oversold signals. This is not a pair to apply an overbought or oversold signal. We want to go with that momentum, but we are grossly overbought. I will absolutely concede that, but it appears that it still has room to run. Now, we've paused here on Friday at the 113 level. So a break of 113 should see this pair start advancing potentially very rapidly towards the 115 area. Now, with USCAD, once again, the Canadian labor report, horrific number came out of Canada, just terrible. And with lower oil prices, it's really put pressure on the Canadian dollar, along with what appears to be the start of a trade war between the US and Canada. This is going to likely keep pressure on the Canadian dollar, okay? The only thing that would really help the Canadian dollar right now is for oil prices to start moving higher again. Now, our critical vantage point level, 135.80, we could be looking at a retracement down to that area, but your key level to watch this week, guys, 135.80. If that area holds, then we would be buyers off this area. If that level breaks and we start seeing oil moving back up, then we would be sellers of USCAD. But keep a very close eye on comments from Mr. Trump, because he's certainly wreaking havoc on some of these currency pairs. Now, when we look at the Aussie dollar and the New Zealand dollar, basically the same trade here. That 74.50 area has been lost. There isn't a lot of support down here until about the 72 area. If the dollar rallies, gold goes lower. That's going to send the Aussie dollar lower. The critical vantage point level to watch here on the upside, 74.89, to see if this area is going to hold. If that area holds, that's your selling opportunity. Same situation we see with New Zealand, US, very identifiable price action here, where we've got support coming in at, or resistance, excuse me, at 70.50, and heavy support down here at 68.50. So if 68.50 starts to break, then there is going to be a very good short here. Now, last week it just couldn't get going to the downside, but you can see that the VantagePoint 18-day predicted moving average contained everything on the top side up at this 69.22 area. So for next week, we're either looking to play a break of the 68.40 area, or we're looking to sell into 69.22. But again, it does look like potentially gold is going to come under pressure, which will hurt the CAD, the New Zealand, and the Aussie currency.